Welcome back to the channel. I'm Investicor, and today we're jumping right into the pre-market action. The pre-market session is where big opportunities and red flags show up, and this morning is packed with both. We're breaking down the top stocks making headlines before the bell, a major bank, a biotech with breakthrough news, and an e-commerce powerhouse. Understanding these early moves can give you a real edge for the trading day. We'll cover the news, the numbers, and what it all means for your portfolio. Grab your coffee. Let's dive into the first stock on our list. Let's get started. First up, let's talk about PNC Financial Services Group, ticker symbol PNC, which is feeling the heat in pre-market trading this morning. Shares are down about 2.5% after the company released its latest quarterly earnings report, and investors are reacting quickly to the numbers. On the surface, things looked solid. PNC actually beat expectations on earnings per share, posting $3.36 compared to the $3.11 analysts were looking for. But dig a little deeper, and the real story emerges. Revenue came in at $515 billion, just shy of the $522 billion Wall Street had hoped for. That shortfall is what's weighing on the stock. The main culprit behind the revenue miss? Net interest income, or NII, which is a key measure of how much banks make from lending versus what they pay on deposits, came in light at $3.26 billion, below what analysts had penciled in. That's a red flag for banks because it signals that profit margins are getting squeezed as interest rates stay elevated and competition for deposits heats up. Investors are increasingly worried about PNC's ability to maintain profitability in this environment, as the bank is forced to pay more to attract and keep deposits while also facing tougher lending conditions and potentially slower loan growth. In today's market, even a small miss on revenue or margins can trigger a sharp sell-off, especially with the entire banking sector under a microscope after recent volatility and concerns about the broader economy. The market is now recalibrating its expectations for PNC, focusing less on the earnings beat and more on the revenue and margin squeeze that could persist if rates remain high. This is a classic example of how, in banking, the details beneath the headline numbers can matter far more than the top-line results. Investors want to see sustainable growth, not just a one-off earnings beat. For now, PNC's slight revenue miss and margin pressure are enough to spook investors and send the stock lower before the opening bell, as traders brace for more volatility. It's a reminder that with banks, you always need to dig deeper than the headline numbers. Look at the trends in net interest income, deposit costs, and loan growth to get the full picture. We'll be watching closely to see if PNC can recover once regular trading kicks in, or if this revenue miss sets the tone for the rest of the quarter. Now, let's turn our attention to the next big mover making headlines this morning. Switching gears to biotech, ImmunityBio, ticker IBRX, is exploding higher, up a staggering 35% in pre-market trading. This kind of move is rare and has caught the attention of both Wall Street and retail investors alike, as excitement builds around what could be a transformative moment for the company. The reason behind this surge? ImmunityBio just received long-awaited FDA approval for its innovative new bladder cancer treatment, a milestone that's been years in the making and marks a major step forward for patients and the company. This is a true game changer. With FDA approval, ImmunityBio instantly transitions from a clinical stage hopeful to a commercial stage biotech, opening the door to new revenue streams and a much larger presence in the pharmaceutical industry. The newly approved drug specifically targets patients with very limited treatment options, addressing a critical unmet need in bladder cancer care. This not only gives hope to patients, but also positions ImmunityBio to capture a significant share of a multi-billion-dollar market. It's worth noting that ImmunityBio overcame a previous FDA rejection, diligently fixed manufacturing and quality control issues, and now, after months of hard work, finally has the green light to launch its therapy. This approval dramatically de-risks the company, removing a major overhang and unlocking real, tangible revenue potential for the first time in its history. Now, analysts are scrambling to update their models, trying to estimate potential sales, market size, and pricing power. That's a big reason why the stock is seeing such a massive jump today. With approval in hand, ImmunityBio can finally market the drug, build out a dedicated sales force, and start generating meaningful revenue, turning years of research into real-world impact. This is the inflection point every biotech investor dreams of, when years of risk and patience are finally rewarded with a breakthrough. The FDA's decision also boosts confidence in ImmunityBio's broader drug pipeline, suggesting that future candidates may have a smoother path to approval. A 35% surge isn't just hype. It's the market pricing and a fundamental shift in ImmunityBio's future prospects and its potential to become a major player in oncology. Huge congrats to long-term holders who believed in the company through ups and downs. This is your moment. With ImmunityBio now in the spotlight, let's see what's next on our pre-market watch list as the biotech sector heats up. Next up, let's talk about Coupang, ticker CPNG, which is making headlines this morning. The stock is up over 6% in pre-market trading, and the reason is a major analyst upgrade that's turning heads across Wall Street. Deutsche Bank, one of the world's leading financial institutions, just issued a bullish call on Coupang, and investors are taking notice. The bank upgraded Coupang from hold to buy, signaling a shift in sentiment, and hiked its price target from $15.50 to $22. That's a significant jump, reflecting growing optimism about Coupang's future prospects and its ability to deliver strong results. This is a massive vote of confidence from a top-tier bank, and it sends a clear signal to the market that Coupang is entering a new phase of growth and profitability. Investors are paying close attention to these kinds of upgrades, as they often precede big moves in the stock. Deutsche Bank's analysts see competition easing in South Korea's e-commerce space, which could give Coupang more room to expand and improve its margins. With fewer rivals fighting for market share, Coupang can focus on efficiency and customer experience. The company is now shifting its strategy from a growth-at-all-costs approach to a focus on profitability. This pivot is exactly what many investors and analysts have been waiting for, as it suggests Coupang is maturing as a business and aiming for sustainable long-term gains. Beyond its core e-commerce business, Coupang's other ventures, like food delivery and streaming, are also gaining traction. These fast-growing segments are helping to create a sticky ecosystem that keeps customers coming back and spending more. When a top analyst upgrades a stock and raises the target by 40%, it doesn't just grab attention. It can spark a wave of buying as traders and institutions rush to get in ahead of the crowd. These upgrades often act as catalysts for further momentum. As a result, institutional investors and active traders are piling in, creating a self-fulfilling rally that can push the stock even higher in the short term. The excitement is palpable on the trading floor. The story here is all about easing competition, a strategic pivot to profits, and a rapidly growing ecosystem that's locking in customers. These are the ingredients for a compelling investment thesis. Deutsche Bank's upgrade has put Coupang firmly in the spotlight, and the market is responding with enthusiasm. The company is now on the radar of even more investors and analysts. Keep an eye out for more analyst moves and potential upgrades in the days ahead, as the story continues to unfold and more firms weigh in on Coupang's prospects. Now, let's check out another big mover making waves in today's market. United Health Group, ticker UNH, is up 4% pre-market after its earnings report. The big story. The company finally quantified the impact of a recent cyber attack, $1.4 billion in Q1. That's a huge hit, but not as bad as feared, and United Health reaffirmed its full-year guidance. Investors are breathing a sigh of relief, triggering a classic relief rally. Beyond the cyber attack, core results were strong, $6.91 EPS on $99.8 billion revenue, both beating expectations. The medical loss ratio was in line, easing concerns about runaway healthcare costs. The market's takeaway: the worst-case scenario didn't happen, and the business remains robust. Certainty is valuable, especially for a blue chip like United Health. The stock is popping as investors see the company has a handle on the crisis and its core business is intact. Sometimes, not as bad as feared is all it takes for a rally. Let's wrap up with one more financial giant. Morgan Stanley, ticker MS, is up 3.5% pre-market thanks to a stellar earnings report. The star? Its wealth management division, which posted a record $6.9 billion in revenue. Net new assets topped $90 billion, showing clients trust Morgan Stanley as a safe haven. This division's stability is exactly what investors want in uncertain markets. The firm's strategy to focus on wealth management, bolstered by acquisitions like E*TRADE, is paying off. Investment banking and trading also performed well, but wealth management stole the show. More stable, fee-based revenue means higher quality earnings and a higher valuation. The market is rewarding Morgan Stanley for building a wealth management powerhouse. In a volatile world, the ultra-wealthy are flocking to Morgan Stanley, and the firm is capitalizing. This strong quarter sets Morgan Stanley apart from its peers. Let's close out with a quick recap. That's a wrap on today's top pre-market movers. From ImmunityBio's FDA win to earnings reactions from PNC, United Health, and Morgan Stanley, there's plenty to watch. Understanding the why behind these moves helps you cut through the noise and spot real opportunities. What do you think? Are you buying the dip, chasing the rally, or sitting on the sidelines? Drop your thoughts in the comments. I read everyone. Don't forget to subscribe for daily market updates. Thanks for watching. See you in the next video.